Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what we can talk about? Well, I'm going to spend a lot of time this week on the methodology in action. There's a lot of good stuff that's happening. We got one free rolling. We have one that's closing in on the initial profit target. I have a new mystery chart and I have a chart that's not a mystery chart. And I'm going to show you where to find all these in just a few minutes. Also, for the mind to trade, we won't have as much time to spend on that this week, but we're going to start part 8 this week on that, and that's the wisdom of Jesse Livermore, part 8, that is. Housekeeping, I do take requests. It makes my job a lot easier. Just tell me what you want me to cover. You can go to davelandry.com/contact and let me know. You can also bring your questions to the weekly webinar I do every week, still live here, davelandry.com/webinar. There's my Twitter information and YouTube. Hit me up there if you like. Leave a comment on YouTube too. I appreciate it. So my YouTube channel is different from the StockCharts channel that you're probably watching this on. Just a FYI on that. All right, let's talk about the mystery charts and the methodology in action. As I preach, free rolling is the secret to trading success. With free rolling, we're taking a partial profit, we're bumping our stop to break even, and if the trend continues in our favor, we'll stick with it for as long as possible. And as possible is until stopped out. So here's SYM. It's one of those AI tangent kind of stocks. It's got the AI and the buzzwords when they describe the stock. Anyway, there's the parameters: entry 2690, protective stop 2150, IPT of 3230. The IPT is simply our initial profit target. That's simply the amount you're risking added to the entry. The number of shares is the amount you're risking. You would divide 2,000 by the amount you're risking, and that will give you the number of shares. If you put your information in for the aforementioned link, davelandry.com/StockCharts, you'll get this tracking spreadsheet along with the slides from this presentation and all the other presentations combined. So you can see we have nice Landry light above the 30 EMA, followed by a pullback. And if you look down below, we've got the Landry light indicator, or as I often call it, illustrator. You can see about 30 bars or so of Landry light, nice little pullback to the EMA. The great thing about Landry light pullbacks is you can actually program them in, and they're pretty easy to recognize even if not programmed. I just like to look at a lot of charts every day. As I've been saying with this one, the trend was also accelerating, and that's the strategy I call it, accelerating momentum strategy, easy for me to say. And notice that the move higher in more recent times was a very persistent one. That's also a pattern I call persistent pullbacks, or another pattern I call persistent pullbacks. Entries here, stops down here, initial profit target up here. Now, again, when we hit that initial profit target, we bring the stop up to break even, and then we begin to trail the stop higher, or continue to trail the stop higher, I should say. We do trail the stop higher on the initial position, and that's usually on about a one-for-one basis. But as I've been saying quite a bit, in recent years, I'm a little bit more lenient on trailing there too. And the other thing I do, people say, well, how exactly do you trail your stops? Well, I do two things. One, I do what I call keep the change. So let's say this stock goes up about 20 cents or 30 cents. It's a new high territory, since we bought it at least, and closes there. Then I won't even bother adjusting the stop. Now, let's say we have a banner day. Let's say it goes up 5 points. I might only bump the stop up 3 or 4 points on that day, thereby allowing that stop to gradually loosen over time. I never move the stop away from the stock. It's only toward the stock. And if you look at prior shows, you'll see a lot of money management. This is for my model account. I like to track what I recommend as closely as possible. In other words, I like to put on the exact trades. That way, I could show that it does work, at least over time. Right here, you have $2,000 or 2% on your account. So you bank half of that by selling half of your shares, and then you hold on with the trailing stop. Now, at the time I took this snapshot, it was at 46.50. It's traded much higher since, and last time I looked, it was about 48 or so a couple of points higher than it is now. But you can see so far so good there. And I'll show you the spreadsheet here. You can see that this was a spreadsheet, and here's the trade in here based on that snapshot I showed a second ago. And here's the BTBT trade down below, as you can see. So let's take a look at BTBT. This is not a mystery chart. Notice it's a longer term uptrend, and you can see it has begun to pull back. And it's not a mystery chart because once it triggered on the service, I began to publicly discuss the setup since it's officially a trigger. And I don't usually discuss these, obviously, before they trigger out of courtesy to my clients. So again, there's the parameters. You can see entry was here, stop down here, initial profit target up here. Haven't quite got to that initial profit target, but it's working its way there, and it's getting fairly close. This is what the stock looks like longer term. It's this huge, big picture bottom. It bottomed out forever, and now it's beginning to rally a little bit, as you can see, or a lot of it. If you go to davelandry.com/archives, you can take a look at the trading service on a delayed basis. Once the current setup triggers, whatever I'm recommending or setups triggers, then I put the older services here. So it might be a week old, it might be a couple of weeks old, depending on how things trigger. And here's the BTBT stock. So the SIM was down here on 5.4, and the BT was 6.06. So if you want to take a look at that. Also, if you have the time, it's a good exercise, if I say so myself, and going through as many of these as possible. You'll get to see how I think and what stocks I pick and why I pick them. And that's 100% free. And I really wish I had some sort of resource like this a long time ago. And everything I do, it's with you in mind. It's what I wish I had many years ago. Somebody actually showing me trades, taking the trades, and then showing me what happens, good, bad, and different, as opposed to you two gurus sitting on the tarmac of a plane. I know those guys are getting sued, but you get the idea. So trading's a lot of work, but it can work out nicely over time. You're just not going to get rich quick. All right, here's the mystery chart. And the parameters down there, it's a lower price stock, as you can see. Entry of 235, protective stop 140, IPT 330. So the risk here is 0.95. So you can see the share size goes up quite a bit, and that's based, again, on how much you're risking per trade and, of course, your account size. And, again, if you put in your information at davelandry.com/StockCharts, you'll get that spreadsheet as part of the package, along with the slides and a bunch of other goodies. All right, you can see longer-term uptrend intact, and actually what I like mostly about this one was it was coming off of all-time lows, and it doesn't really look like it in a chart, but if you squinch this in a little bit, that was a pretty significant rally, several 100% higher before it pulls back. Entry here, stop down here, and IPT up here somewhere. So far it has a trigger, no trade. If it keeps pulling back, what I will do is I'll begin to lower this entry and drop the stop down a little bit accordingly, and of course bring down the IPT a little bit. So let's just see how it shakes out. Longer term, as you can see, bigger picture, cup and handle, nice bottoming pattern here, and you can see this move is a little bit more significant when you squish the chart up a little bit. So let's see how that one shakes out. All right, let's jump into Mind the Trade. Let's continue to talk about Jesse Livermore. As I say each week, this presentation, or these presentations, are coming mostly from Reminiscence of a Stock Operator, but I will pull from World's Greatest Stock Trader for some background information, some color commentary maybe. And I actually learned a lot about Mr. Livermore from this. A very good book for you to read also. And there's a lot of quotes and stuff in here that are really good too. And then How to Trade Stocks. And I think I remember now why I wasn't blown away with How to Trade Stocks, because the actual book itself is more like a booklet. And then the rest of the stuff was a lot of commentary that Mr. Smitten added. And it's good stuff, and it's backed with a lot of quotes. So I would recommend you do read this book. But there's not a whole lot to it. And we'll talk about his thoughts on trading stocks when we get to it. But we're going to focus mostly, again, on Reminiscence. And I think we're on Chapter 8 now. So he was fishing in an attempt to remove himself from the market. And somebody with a powerboat brought a newspaper out to the yacht. And Livermore was real bearish at the time. But he saw the market had rallied. He was thinking, this might be a good chance to put on some new positions before it tanked. And then, although he was bearish, when he got back to the shore, he saw Anaconda Copper, which was taken off, and it was passing a century mark at 300. His point is that if a stock can blow through 100, it should keep on going. And in this case, he thought since it was getting ready to take out 300, it would go to 340. Now, he did not. So Livermore didn't use a limit order to exit, and that's very important. He wanted out. If he had gone for his price, he would have lost a ton. So never use limit orders unless you're profit taking For instance, like that BTBT, I think the IPT is 415, so you could put a limit order in at 415 intraday, during the day that is, and just see if it gets hit. I wouldn't carry it overnight, but during the day, if it's kind of rallying, you want to make sure you don't miss that initial profit target, then by all means. If you're buying options, you got to be really careful because they're usually thin, the spreads are really bad, so you have to use limit orders. But a lot of times, if you try to go into a market with a limit order, you're not going to get your positions. So in this case, he had a strong opinion about the stock, but it was loosely held. And that's a very important thing to remember when it comes to markets. Be willing to change your mind when wrong. So strong opinions, loosely held. If it, and this is Anaconda, reacted, it meant that presidents had failed me and I was wrong. He was wrong about it blowing through 300 to keep on going. And the only thing to do when a man is wrong is to be right by ceasing to be wrong. So he sold his Anaconda, all 8,000 shares, and all I've got, sell it, don't argue about it. Now, the tape is your friend, and the trend is your friend. You want to avoid goads and news. So after he sold the Anaconda, someone said, but you'll be sorry that you sold that Anaconda. I think it was Ollie Black. It's going to 500. Not this time, Ollie, I said. He stared at me and said, you're pretty cocky about it. Not I, the tape, I said. So he thought it was going up, but what did it do? It went down. So he got out, no questions asked, even though he was being antagonized by others for getting out of the position. Now, he decided it was time to short the Anaconda. It was also time to short a lot of other stocks. So he went back to New York to mount his bear campaign. That's kind of a reoccurring theme, and I'm going to hit upon it one more time in this presentation, either in a minute or next week. But the bottom line is, many times he decides to take a break to get away from the market, and then something kind of draws him back in. And that's kind of like a can't stand it type of thing. I remember years ago I was working on my first book, and my trading wasn't going so hot. It was after the big bull market, and the market had gotten really choppy. And I said, you know what? I'm just losing money trying to trade every day in this stupid market. So I was going to back off and focus on the book. And in doing that, by becoming busy, I found myself, first of all, not trading, and then only trading when there was a fantastic opportunity. And my trading got a lot better, even though conditions weren't fantastic. So sometimes you have to get away from the markets. And, you know, I'm not that good at doing that because I rarely take any time off and I rarely walk too far away from my screens. But anyway, do as I say, not as I do. But now I was right and prospering. However, the real joy was in the consciousness that as a trader, I was at last on the right track. I still had much to learn, but I knew what to do. No more floundering, no more half-right methods. So he starts to become enlightened a little bit, and he starts to talk more and more about trading with the major trend. And then he talks about the fact that in the bucket shops, yeah, day trading worked out pretty good there. But once he got to real markets, he began to realize that the real money is in the big pull. And I'll show you some examples of that in 1 second. The SYM, for instance, will be an example of that. You get into a position, it turns into a real big winner, and then you ride it for as long as possible. The way to make money is to make it. The way to make big money is to be right at the exact right time. In this business, a man has to think of both theory and practice. A speculator must not merely be a student, he must be both a student and a speculator. So that reminds me of he who seeks silver will never be happy with silver. Now that's Ecclesiastes, but I also read this in Viewpoints of a Commodity Trader, and maybe one day I'll do some presentations on that. And that's a great book that you should have. If you go to davelandry.com/books-2-read, you can find that one listed there. Now, I do think you need to be fascinated with the markets, love it or leave it. And I know that's not exactly what Mr. Livermore is saying, but as far as being a student, you have to kind of detach yourself and look at the market and take an educated guess as to what it will do next. And then, obviously, also be a trader and make bets, and I hate to use the word bets, but make bets, for lack of a better word, based on your analysis. You have to be willing to see what is. And I think if you're a student looking at the markets, it's a lot easier to see what is, even if it's not what you want it to be. Well, that's the problem, is once you make a trade, then all of a sudden you have a bias, and it's a lot harder to see what is. And that's one reason, or at least my take on being a student and the speculator. As I often preach, you have to believe in what you see and not in what you believe. Be fascinated with market moves, even those against you. And that's kind of a tough one, but I do find market moves very interesting. And although I might drop an F-bomb or two when they go against me, I find those moves kind of interesting too. Now, just to let you know where he was up about $750,000 because he was really heavily shorting stocks, and stocks were headed lower. And all his rich friends were headed to Europe, so he decided that he would follow them. The bear market continued, and Livermore once again saw a newspaper. Smelters had declared a special dividend. He felt that this was a last-ditched effort to save the stock, indicative of the time. So it was a bear market, and this stock decides to declare a special dividend to try to create some demand. And it's kind of like all the signs and signals we saw way back in 1999. I'm kind of dating myself, but there were a lot of signs that the market was super frothy. Now, you don't necessarily want to sell a market just because there are signs, but then when the tape actually begins to agree with things, it's time to think about shorting or getting out the way at the least. Tape reading was an important part of the game. So was beginning at the right time. So was sticking to your position. Now, one thing he does talk about in that How to Trade Stocks book, which I'll talk a little bit about in upcoming presentations, is buying at the pivot point. And for me, a pivot point would be a pullback for the most part, like many of my patterns, and occasionally a breakout pattern in something like IPOs. But the greatest discovery was that a man must study general conditions. Okay, the overall market, a rising tide lifts all boat, a falling tide sinks all boat. Those adages come to mind. To size them so as to be able to anticipate probabilities. In short, I had learned that I had to work for my money. I was no longer betting blindly or concerned with mastering the technique of the game, but with earning my successes by hard study and clear thinking. I also found that nobody was immune from the danger of making sucker plays. And for a sucker play, a man gets sucker pay. For the paymaster is on the job and never loses the pay envelope that is coming to you. It took me a while to wrap my head around it, because the way these old time language or old time books or whatever, they have a bit of a flowery language about the way they talk about things. But the point is that if you're doing sucker plays, you're going to get sucker pay. And by sucker pay, he means you're going to lose money. And that's just a weird way of putting it. Anyway, a lot of what's coming out of Livermore and his world travels along with this trading is it's important to trade for longer term gains. Now, trading purely for longer term gains, your accuracy is going to be abysmal, and your drawdowns are also going to be abysmal. And I would never pick on anyone, but the turtles happened to be in the right place at the right time. They were actually using too much leverage. They would have blown up, or many of them would have blown up much sooner had they not realized that they were over leveraging for their system and what they were doing. But the real money is in longer term trading. So it becomes a bit of a dilemma. Short-term trading is more accurate. Unfortunately, it doesn't make enough because bad stuff can still happen. So as an example of the big pull, so to speak, the TFM 10% system comes to mind. Recently had a signal in the Qs, and I did some research in the Qs, and I found out that it works pretty good, so I decided that it was worth taking it. Kind of like an S&G trade, but I did put on 100 shares, which is, it's not huge, but it is a substantial amount of money. But you can see that it triggered a TFM bias signal. This is a weekly chart. It had 2 bars of Landry light above the 50 simple moving average, and it also closed above the buy line, which is 10% below the 50-week closing high. And if you go to the aforementioned link, davelandry.com/StockCharts, you'll also get limited access to the members area, where I have a market timing course where I explain this system in a little bit more detail. It originally was designed for the S&P 500. You can see that's the entry, 319.49. And when I grabbed this chart, it was up 42.37 points. So it's $4,237, and that's on only 100 shares. So knock on wood, as I'm recording this presentation, the Qs are about 5 points higher than they are now, or at least in that slide. So another example, the big pull, of course, would be the SYM trade. So that one trade, $4,635, $1,000 has been banked, and $36.35 open at this point. And like I said earlier, it's probably a couple points higher right now. So that gives you another couple hundred points, $200 on that, about $400 more. Anyway, you can see that's decent money, $4,600 or $5K round numbers, if you add in the higher price of the stock. That's a pretty big move, 4.5% to 5%. And remember, this is on a 100K account. So that's a decent move. And if this keeps on keeping on, and let's hope, I know you should never hope in trading, but this keeps on keeping on, this could turn into a substantial winner. And all it takes is one or two really big winners like this a year to make your year. Now, Livermore becomes Enlightened. A day I should never forget, October 24th, 1907. That was a day I remember most vividly of all the days of my life as a stock operator. It was the day when my winnings exceeded $1 million. It marked the successful ending of my first deliberately planned trading campaign. What I had foreseen had come to pass. But more than all these things was this. A wild dream of mine had been realized. I had been king for a day. He had a dream where he was loading up I don't guess it was a truck, because they didn't have trucks back then, or there weren't a lot of them, at least in 1907. He was loading up a cart with gold. He broke the market, and he really could have crushed it, and he started buying. Well, I was worth over $1 million after the close of the business day. My biggest winnings were not in dollars, but in tangibles. I had learned what a man must do in order to make big money. I was permanently out of the gambler class. I had at last learned to trade intelligently in a big way. It was a day of days for me. Now, he often over-leverages, and through over-leveraging, he blows up. So I would be cautious to be crazy over-committed to a market like he occasionally does. He had 8,000 shares of a $3,000 stock. So that's $2.5 million, round numbers of stock. That's a lot of stock, and I don't think he had that much more money. So he basically kind of went all in on the Anaconda. Luckily, he got out, no questions asked, when it went against him. And then he certainly over-leveraged when he began to sell this market, especially as it dropped more and more. So I would caution you against betting your entire account on a move. 2% is what I like to risk if stopped out. That's plenty, believe me, and that could add up over time. But he did mount his campaign, and it was to a point where he was asked not to crush the market any further, because it could have destroyed the entire market. He had become so big by shorting stocks over this amount of time. So he actually began buying as the market began to bounce off its lows. Now, a couple of takeaways and some random thoughts. He was bearish overall, but he was bullish on one issue. And I recently read, it's kind of interesting, I think it was Burton Pew, that said, no stock wears a halo in a bear market, meaning that a lot of stocks, or most stocks, will go down. But every now and then you will get one that defines gravity, and Anaconda was that one. And that's why he was buying it in spite of overall conditions. If I see a fantastic looking setup, I will buy it even in a bear market. When it started going down, he bailed out at the market, no questions asked. So he was bullish on the stock, strong opinion, right? He really thought it was going to 340 from 300, but then it began to slide back below 300, and then he bailed out of it. Now, he began shorting it, but not out of spite, and that's where you got to be really careful. If you lose money on a trade, don't turn around and try to do just the opposite in that trade. Believe me, I've gotten sucked into that type of bad behavior before. It usually ends badly. The worst that could happen is it turns out okay, and then now you've trained yourself with that bad behavior. But he wasn't shorting it out of spite. He was shorting it because it was actually going down. Now, he was able to have opinions, but at the same time listen to the tape. And if you look at the earlier presentations, he had opinions and then he ignored the tape, and that was his downfall, at least part of one or two or more of his blow-ups. Now, he did come to realize that the big money is in longer-term trends, and he sort of hinted at this in earlier chapters. As I preach, not to beat the dead horse, but once again, believe in what you see and not in what you believe. Make sure you're avoiding tips and trade goads. I have a lot of clients that I'm friendly with, and some of them are better at trading certain things than I am, and I get a little jealous sometimes. Let's say they're day trading or something, and they're making a lot of money in something, and it makes me feel like I want to jump in too. So you've got to be really careful in that, and make sure you're trading your own methodology or a methodology very similar to yours. So like if one of my clients shows me a stock that's set up like my methodology, then by all means I'll take it. But if somebody's scalping, I'm not going to try to follow that client. Well, that's all my time for this week. I want to thank everybody for watching. Again, if you need follow-up information, davelandry.com/StockCharts. All the stuff I mentioned earlier, including both of my books in PDF format. If you need to reach me, davelandry.com/contact. Join me every Thursday, davelandry.com/webinar, on most Thursdays, for Dave Landry's The Week in Charts. And again, you can reach me at tfollowingmoron. I want to thank everybody again for watching, and may the trend be with you.